Hi there, Andrew Thompson here from Precision Market Trading. We haven't done a video for a few weeks because there hasn't been much to tell. We had our big forecast decline from the March-April top, March for futures, April for all odds, down to the recent August low. And it's had a big sharp 3-day rally up, and it's pretty well done nothing since, gone sideways. Good day trading ranges, but position trading is get chopped to pieces. So we haven't touched it. As I said in the previous video, I did back on the day of the low here. We bought there, and 3 days later, we got out around here. Got around here because after a big dump, there's always going to be a big short covering rally where greed also takes over from fear, and I don't want to be any part of that. Also, the range up was 484 points. As you may be aware, the big bear range down from the 07 top to 09 low was 490 odd degrees. So the 484, 485s, 490s come out a lot in this market in volatile times. Only in volatile times. It seems to be a volatility number. So when you see that, big range up in 3 days, get out. And I'm glad I did because it's done nothing either way. Also, the way I'm looking at it, what can't rally after a big decline has to go down. So this is struggled. This is up and down, up and down, up and down in a very tight range, just like a spring. So this spring is going to explode one way or the other. It may go up, but my bias at the moment, well, it's only my opinion, is it's going to go down. I do have targets a lot lower than this. I have a strong time early November for the market. So I'm hoping it's a low, because if it's the top in November and I see a strong time, look out below again. So, but at the moment, my bias is down to lower prices. The next chart is a swing chart. It's like an old-fashioned point and figure chart. It's basically, this is a 3-day swing chart. What it means is the bars have to move up or down 3 days in a row to generate a movement. So this is obviously over 3 days up. It takes away the noise. This is 2011. Yes, this is 4 years of action consolidated into a tighter frame. It takes away the noise and you get a better picture. The picture I want to show you here is this is the August low. This is the 484 point low I showed you 3 days later. This is the old low. We had topped down to this low where we rallied up to 50% and then we collapsed. This has left space. Space is dangerous in a strong market. Whether it's going up and you come down and sit above the old top, you buy your heart out. But when it's going down, it's the same thing. This is a 30-point odd space between this low and this top, and it's retraced a long way back in here. So for me, this is why I'm a bit bearish on this market. This market for me is coming down around here. Not all at once, but if I'm right, we've got 4 to 6 weeks of pain coming up. Also, just for your Fibonacci people, I'm not big on it, but a lot of people are. As I said, this down to there is 50%. This down to here, back up to here is 0.382. So you've got space, 382. 382 retracement, any market, bull or bear, usually means strong continuation. So this is rejected off this level. It's come back down here. Things are looking a bit shaky. So for me, I'm biased to the short side. And if we start breaking down from here, I will once again be short, and I'll be a 5-week trade at least, because we do not get lows in October. We might get a crash in October, but we don't get lows in October. We get lows in November. So if it starts declining, it's got 6 weeks in it, 4 to 6 weeks. So goodbye for now. We'll see how we go. But if you're taking this, looking at this, I'd have very tight stops. It's going to be very volatile the next few weeks, either way, up or down. Goodbye.